Since late last year, Senator Elizabeth Warren has been hounding Tesla CEO Elon Musk to pay his so-called fair share of taxes, claiming that he has continued to pay no taxes at all. But in fact, Elon Musk triggered a massive tax event last year in 2021 by selling shares combined with exercising stock options, which left him with a tax bill of $11 billion, the highest tax bill ever paid by a single person in history. With Elizabeth Warren still in disbelief, Elon Musk took to Twitter almost a year ago today and called Warren out as she had completely ignored the benefits that Elon and Tesla have brought to society, and at the same time he exposed some of the questionable decisions that Warren herself has made. Ultimately, Elizabeth Warren was on a mission to overtax new technology and stifle innovation in the United States, especially at a time when other countries, such as China, are moving forward at full speed with no restrictions, trying to dominate the technology playing field. In the meantime, Tesla's stock has been hammered all year in 2022, reaching lows not seen since 2020. All while market pundits attribute the losses to Elon Musk's takeover of Twitter. Elon has ruffled some feathers, specifically on the Democratic Party front, for which Elizabeth Warren is a part of, as he continues to expose collusion between government entities and the previous Twitter management team. Now Elizabeth Warren is fighting back, this time coming from a new angle, seemingly looking out for Tesla's shareholder interests by writing a letter to the board of directors to ask if Elon Musk's decision to buy Twitter is affecting Tesla investors. And before we continue, stop using Yahoo Finance, stop using Google Finance, and have a look at our website, themarketisopen.com, where we have instant stock quotes and financial data going back 10 years, and it's all freely available. Elizabeth Warren's letter to Tesla's board was directed at chairwoman Robin Denholm, who took over the role from Elon Musk in 2018. Warren writes that Elon Musk's takeover as Twitter CEO raises concerns about his duties at Tesla, specifically related to conflicts of interest, misappropriation of corporate assets, and other actions that may not be in the best interest of Tesla's shareholders. She writes, "As you know, it is the legal obligation of Tesla's board to ensure that its CEO is meeting all his legal responsibilities and serving as an effective leader." Now, so far, up until now, we haven't actually seen any real signs of a crumbling in Tesla's fundamental business. There have certainly been rumors of waning demand, in part because Tesla's lead time has shortened for many of its vehicles, from the 6 months to a year time frame down to just a few weeks in order to get a delivery of a Tesla vehicle. This, however, doesn't necessarily mean weakening demand, and actually happens to be one of the goals that Elon Musk set out to fix just a few months ago, citing that a 6-month or 1-year wait time was unacceptable. But now that the company has made progress on this initiative, cutting through supply chain issues, it is being viewed as a major negative. Tesla has also cut price on some models and added perks such as 10,000 miles of free supercharging in order to encourage buyers to take delivery by the end of the year. The new tax credits, which start in 2023, may be putting pressure on sales, since people will get a large $7,500 discount if they simply wait a few days until the new year to get the vehicle. Nonetheless, Tesla has made similar business decisions in other years to ease end-of-year deliveries, but this time it's likely a short-term phenomenon, since the tax credit will turn from a headwind to a tailwind immediately in January, as the credits are specifically designed to increase demand for electric vehicle adoption. But the main glaring concern is the drop in share price, which Elizabeth Warren is hoping to leverage against Elon Musk with this letter, as Tesla stock has crashed about 32% since Elon Musk's acquisition of Twitter and is down 65% on the year. However, there are plenty of other companies whose stocks have seen massive drops this year, many even far in excess of Tesla's decline. Even car companies such as Rivian down 79% on the year, or Lucid down 82%. Even Chinese competitor NIO is down 67% on the year. But why doesn't Elizabeth Warren go after Tesla's other American counterparts? It appears that Elizabeth Warren may not have the best interests at heart for Tesla shareholders to begin with. She's likely not even a shareholder herself, simply someone who is out to get Elon Musk. She has always been critical of Elon Musk's billionaire status, and back in November on The Late Show with Stephen Colbert, she stated, "I got a real problem with him." So we can already see this isn't coming from a place of good faith, trying to protect Tesla shareholders. If anything, she may be trying to hurt them further, and many Tesla shareholders certainly don't want to have anything to do with Warren, who is simply trying to stir more trouble for the CEO. Elon Musk even shot back after Warren's letter was sent, saying that the United States has definitely been harmed by having her as a senator. Elizabeth Warren brings up a first point in her letter to Tesla's board on misappropriation of Tesla's resources, saying that Elon Musk is funneling Tesla resources into Twitter. She speculates that this might impact Tesla's sales and earnings or cause delays in programs at Tesla, as if she's worried about Tesla's financial position. She goes on to say that Elon Musk brought over 50 Tesla employees to Twitter, stating that it wasn't clear how these employees were expected to split their time between the companies. Now, Elon Musk has already testified in court about this, saying that they were volunteering for a few days after hours and that 50 employees would have basically no effect on a company of 120,000 people. 50 people represents just 0.04% of the overall staff. One thing to note is that Tesla employees already work on the order of 80 hours per week. So even if they split their time between Tesla and Twitter, that's still a regular 40-hour work week at Tesla. Actually, the beauty of Elon Musk's companies is that employees can fairly seamlessly move between SpaceX or Tesla or Boring Company or Neuralink in order to help out or implement ideas elsewhere. This is a huge benefit as they can bring in expertise to help solve problems more quickly, and there's knowledge transfer between the firms. Elon has talked about this in the past multiple times, that SpaceX has helped Tesla and vice versa. For instance, Tesla leveraged SpaceX's help for designing the cooling system in their Dojo supercomputer servers. Elizabeth Warren didn't seem to have a problem with that. Shareholders should actually highly appreciate this setup that Elon Musk has built, especially if Twitter becomes a hardcore software engineering company with massive scale, which it already is for the most part. There's surely expertise that can be transferred back to Tesla, such as improving their software and scaling abilities. It would be a shame if all of these companies weren't allowed to communicate and would likely hinder progress. Now, Elizabeth Warren moves on to conflicts of interest, listing competing car makers such as Volkswagen, Ford, General Motors, and others, and how Twitter could give them good deals on advertising which would somehow hurt Tesla, or vice versa by providing free advertising to Tesla which would actually benefit Tesla. This latter point has very little to do with the share price decline, and Tesla has also never paid for advertising yet throughout its entire history. But nonetheless, this issue seems like more of a Twitter problem than a Tesla problem. There are plenty of other companies that have similar conflicts and are seemingly able to manage them, such as Google, for instance, putting a small ad on their homepage, the most visited page on the internet, for their latest phone, something they've been known to do. Or is Facebook allowed to tell people to buy Oculus VR products? Elizabeth Warren only seems to be focused on Tesla for all the wrong reasons. Warren also discusses the impact of Elon Musk's stock sales on Tesla shareholders, referencing quotes from financial analysts speculating that if Elon Musk's Twitter deal goes wrong, it could burn Tesla shareholders, or that Elon Musk could become distracted if managing the platform becomes a headache and leads to controversies that are distracting or alienate potential Tesla customers. It sounds like some of these controversies may be affecting Elizabeth Warren, which is why she's once again attacking Elon Musk. Now, Elon Musk's stock in Tesla is his personal money, so he can do whatever he wants with it. Could it reduce Tesla's stock price in the short term if he sells? Of course. But long term, earnings should be the thing that drives the direction of the stock price. It seems that Warren's letter is a compilation of all of the negative Tesla rumors found on Twitter. She even mentions Twitter being an albatross that hangs over Tesla, since Elon may have to sell more Tesla shares to help finance the Twitter deal. That said, up until now, it's reported that Elon Musk has already sold about $40 billion worth of Tesla stock. The Twitter deal totaled $44 billion and included third-party investors. Now, Elon Musk has tried to instill confidence in Tesla, emphasizing that Tesla will do great long-term, and that short-term macroeconomic headwinds currently driving the stock price with interest rates on the rise reduce the value of stocks. He has also reassured investors by frankly telling them to revisit their Securities Analysis 101 textbooks, which would factor in the rising interest rate environment, indeed putting pressure on stocks by reducing the discounted value of a company's future cash flows. Again, nothing to do with Twitter. And Tesla does indeed sit in a basket with many other stocks that are down roughly just as much this year, and they don't have Twitter issues to worry about. Now, along these same lines, some of the loudest, seemingly most panicked voices that represent retail shareholders seem to include Tesla bulls such as Ross Gerber, Gary Black, and Leo Kogwan. While these three are respected Tesla advocates, none of them are actually retail investors. Both Gary Black and Ross Gerber are fund managers with publicly traded ETFs. Therefore, they run institutional firms that invest on behalf of other clients, and it's in their favor to show positive performance in their funds in order to maintain their clients and investors. While they are strong and loud supporters of Tesla stock, they may have other interests in mind, such as the yearly or quarterly performance of their funds. Leo Kogwan, on the other hand, is Tesla's third largest individual shareholder. However, this is a fairly unique situation where he has purchased billions of dollars of Tesla shares and call options. In turn, these three vocal players, although bullish on Tesla, benefit greatly from high stock prices in the short term to aid their personal interests. While there's nothing wrong with this, typical retail investors have the big advantage of not needing to report to anyone except themselves. The close on December 31st is simply another day in the calendar, and so retail investors can truly purchase a stock for the long term, aligning themselves with the management of the company. If a company like Tesla is executing well, and Elon Musk continues to believe in this incredible engineering company that he's built, then over the long term, Tesla's execution and the numbers that they post will be the ultimate driving factor of the stock price. And retail investors can afford to be patient, take advantage of short-term fluctuations if desired, which could be a real opportunity if Tesla's execution is not reflected in the stock price, similar to how long-term shareholders recall as it was in 2019 when the stock was depressed and the company was intrinsically growing rapidly. While Elizabeth Warren is desperately trying to link Tesla's performance with Twitter, they have little to do with each other. Despite claims that Twitter is somehow hurting Tesla's brand image, only a small percentage of users actually post on Twitter. The drama is fueled by the loudest extroverts, while the majority simply browse Twitter but don't post. Not to mention the billions of people that are not on Twitter at all and don't pay attention to it. Long-term shareholders have seen this before, as Tesla grabs more headlines than it deserves. But these retail investors can effectively sit back and enjoy the chaos, since in the end, it will be Tesla's earnings that matter most. So do you think Elizabeth Warren has Tesla's best interests in mind, or is she simply trying to attack Elon Musk by calling the manager through Tesla's board? That said, if Tesla responded to her accusations, would it help to quell investor fears, or would the so-called Twitter overhang still linger around? Please hit the like button and subscribe. We would really appreciate that. And a huge shout out to all of our patrons that help to support our channel. Your support helps us to continue to make great content. Thank you guys so much for watching.